Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute, late in the session, but what a day. The Fed started things off by cutting rates 50 basis points. The S&P spiked. Treasuries traded lower immediately, but now we're ripping higher. So let's start with the stocks. The S&P traded up to about 31.37. We had some good resistance levels up there. It did cover that 31.10 gap from last week, but we stalled out. And really the Fed, they exuded panic here by cutting 50 basis points. Now, 100% probability they would cut 50 basis points by their March 18th meeting, but to do it today, I think definitely exuded some panic. You have Cleveland Fed President Messer out there this afternoon saying this isn't panic, but that's exactly what it is. It is panic. We do have a good word that the CDC maybe later this week or over the weekend could officially call this a pandemic. So maybe the Fed's just getting ahead of that. But ultimately, like Phil Striebel, our chief market strategist on Bloomberg today, said you would have thought the Fed would do this when there was some fear in the markets, not when the markets were in recovery mode. And that in and of itself has created some fear. We're seeing the S&P trade sharply lower here to finish the session, below or right around 3,000. So what's next? 30.50, 30.60, that was a level of resistance to the upside. It's now a level of resistance still. It was support here on the session out above there. So now the bears are the driver's seat below there. 29.70 is going to bring you some support here tonight, but we get below there, you got a path of least resistance down to 28.5 again. The bears are the driver's seat below that 30.50, 30.60. But the Nasdaq is one you got to keep a closer eye on than usual. Even going back to that January correction, the Nasdaq held a better path. So what we're seeing here is the Nasdaq holding on a closing basis last week the 200-day moving average. That 200-day moving average is still rising. It comes in at about 8,200. So that's your line in the sand. When you get down below there, all bets are off. The selling is going to pick up. But we have a ways to go before there. So right now, 87.50, 87.80 is going to be that resistance level that keeps the bears in the driver's seat. They're going to look to take this thing below 8,500 probably overnight. 8,400 area, 8,425 is going to bring you some first support. We got to hold that overnight. If it doesn't, we're going to start to roll over. So stay nimble out there and keep an eye on things. We're here to help. Don't hesitate to reach out to us. Let's move on to crude oil. Well, actually, first, ISM non-manufacturing. That is what the Fed might be getting ahead of here. ISM non-manufacturing is due at 9 a.m. Central Time tomorrow. Keep an eye on it. Remember, the services PMI number, this is what came out 2 weeks ago that really, we believe, got the ball rolling on things, and the coronavirus is really what pushed things after that. But the ISM non-manufacturing number tomorrow, the Fed may be getting ahead of that number, so keep an eye on that. If it misses and it comes in really bad, we're going to see things pick up. The selling is going to go to the downside. You're going to see some good air pockets in there, especially if the Nasdaq gets below 8,200. Now to crude oil. Crude oil, $49 was the big level of resistance we talked about. We said the risk was the upside this week, and we got that move almost there. 48.66, I think the high was before tailoring back. Now the bears, 47.30, 47.5. We stay below there. Bears in the driver's seat. We do have inventory data to look to tomorrow, but if the risk environment starts to weaken, you're going to see crude follow that lower, although OPEC is still in the crosshairs. Now you got about 1 million barrels per day of production already priced in coming offline. So that's already priced in. So they need to meet that, or you're going to see the market really fall lower. If we close below 85.5 or so, 85.25, next stop 42.5. So keep an eye on that. And now look at gold. Gold today ripped more than $50 higher. We were talking about it this morning, right around that 1600 area. Either you're going to break below 1660, 1670, you're going to break back out above about 1560, 1570, or break back out above about 1620. So that's what we did. We moved above 1620, traded up above some resistance around 1640. We're settling in. The bulls are back in the driver's seat above 1620, so keep an eye on that. And then speaking of safe havens, those treasuries, that's something I spoke about last week. I almost laughed at myself talking about this last week. If the 30-year bond stayed above 166, the path of least resistance is to 176. And we're basically seeing that. We're out above 172 or so here, right around that 172 area today. Keep an eye on this because ultimately, with this path least resistance, it's going to continue, and you're seeing the 10-year move. So we're seeing the 30-year to a potential yield of about 133 if this were to happen. Now, with the 10-year, you're seeing a potential yield. We're breaking below 1% for the first time. We said if you stay above 132 in the 10-year, you're going to see a path of least resistance about 136. That is achieved. On the yield side, we were looking at about 88 to 90. So keep an eye on that. Those are some levels. Again, 176 in the bonds, 136 already achieved in the 10-year. On the yield side, 133 in the 30-year, and then 88, 90 in the 10-year. So keep an eye on that. And now, obviously, the ISM non-manufacturing and other data on the economic calendar are going to drive this stuff, but the currencies too. So you got the dollar. The dollar is trading sharply lower. Could not regain some resistance now, 97.5, 97.75 area. Path least resistance now to 96. So keep an eye on that. And then the euro out above 111, path least resistance up to about 113. So keep an eye on that. Overnight, some of these momentum indicators we have are going to start to rise for the euro, lower for the dollar. So to keep where things are going to be pegged to keep either the bears in the driver's seat or the bulls in the driver's seat. But the Fed already acted. Does the ECB act? Does the Bank of England act? And who else already acted was the RBA. They cut rates last night, 25 basis points. So you're actually seeing the Aussie dollar rally today. 67 in the Aussie, an area that we want to fade it if we can get there. But give us a call. Stay nimble out there. We're here to help. 312-278-0500. We look forward to hearing from you. Thanks a lot.